Hello, everyone, and welcome to another episode of Doja Live, our final episode for this week. But you know what they say, we save the best for last. Let's hope that rings true today. No pressure, Joe. My name is Kim Lantis, and it's my pleasure to be hosting today, going live from my home in Hermosillo, Sonora, Mexico. So if there's some lag or internet issues, I apologize. Co-hosting with me is America Guerrero. Hey, America. She's
Hi.
in beautiful Cancun still. Envy her, envy her.
The birds.
And today's guest is Joe Pulveri you're in California, right?
Yeah, last time I checked.
Last
Awesome
time
out
you
here.
checked. It's awesome. Great. Well, thank you so much for joining us, Joe. We really look forward to the show. Joe is the co-founder and general partner of Pure, and that is a property management business. So today we're going to be talking about Proptech and Fintech. But before we get into those details, we'd like to get to know you a bit better, Joe. So please share about you, your background, and what led up to Pure.
Great. Thanks for having me. And I appreciate the vote of no pressure to round out the week here. I'll endeavor not to disappoint. I'll do my best as I always try to do. But no, look, how I got here. My story is somewhat unusual and not that unusual. I'm actually a Bay Area native, so I'm one of the few people I know who's kind of lived their entire life in the San Francisco Bay Area. We have a lot of people coming in and out of the area. As you know, it's a center of technology and business, obviously, and lots of fun and interesting things happen here. So it attracts a lot of really interesting international crowd. So I've been here basically my whole life, except for a couple of stints overseas working over there. But my background is not actually in property management. In fact, in my company, I'm the one who is probably the rookie on the team. I've got less than 2 years in property management experience, but what I do have is a fairly lengthy history in technology. So I spent the first half of my career as a software M&A professional, so buying and selling software companies based in Europe and based on the West Coast, and then spent the last 20 or so years as an operator, either the CEO or C-level operator of companies in a bunch of different industries. And I try never ever to work in the same industry twice. So I've worked in early e-commerce platforms. I've worked in financial services. Worked in cybersecurity, artificial intelligence platforms, but always kind of distributed SaaS computing architectures, and probably spent the most time in financial services, Fintech. Actually was there kind of when Fintech was born, which I think is right around 2006, and I'm sure we'll come on to that a bit later. But I've had a really interesting run. Have done a lot of things not the right way and a few things the right way, and try to learn and move on every time. But actually came to Pure with a good friend of mine who I'd known for years, and it's Pure's his idea. He's been in property management forever. He's been in the category forever, and we put the company. I actually came out of semi-retirement after selling my last business to do Pure because it seemed like such an amazing opportunity with incredible people. And so far, I'm happy to say, and I know we'll come on to it a little bit here in a second, but it's exceeded my expectations. Fantastic people, fantastic opportunity to transform an industry with technology. And, so far so good. Knock on wood.
Congratulations. Knock on wood. Yeah. That's amazing because not everyone gets to say what you just said, right? That it's been a fantastic experience, and that's great. Before we go into Pure exactly, I've got two questions to lead into this. Number one, you mentioned that you try not to work in the same industry twice, and I'm curious as to what motivates that for you. And then the second question is, what exactly was it about Pure that made you say yes?
So honestly, it's a matter of personal preference for the no industry twice. And I know there's kind of different sorts of people, and some people like to become expert in one thing and they're amazing at it and they stick with it and they can ride it out the entire course of their career and be completely happy. I'm a little bit impatient that way. I like to always, push myself to be learning, which is, why I make a ton of mistakes and do a few things right, because I'm always doing something new and different. And I'm not, it doesn't bother me to wade in and jump into a category and try to learn about it. And it just keeps it things frankly more interesting. And then I think as when you start out doing that, you're too young to know any better. And then you kind of get midway into your career and you're like, okay, this is kind of fun. And even though it's kind of hard, and then you get a little bit toward the more tail end of your career and you're like, wow, that was a really, interesting journey, even if it wasn't, fully successful in every single endeavor, which it wasn't, right? It was successful in enough. And it was just interesting. And I kind of have this mantra that's personal, which is, you can do whatever you want to me, but just don't bore me. And so I have, made it my intention and my objective not to ever be bored in my career. And, so far, so good. And then in terms of the second question, how did I get to Pure? Well, that was actually fairly straightforward. My co-founder is a guy called Michael Catalano, and Mike has been in this space for literally decades. And knows it well. He's well known in the space, and he's one of the people who, from an entrepreneur's perspective, is very forward looking in the category. And he sort of understood where he thought the business needed to go. The challenge with this particular industry is it's not one that innovates very quickly, and it's not one that up until recently has had a lot of attention from investors.
Challenging.
It's very challenging, and it's very antiquated. But I will say this, despite those challenges, it's got, of all the industries I've worked in, it has the nicest people, right? And the really super genuinely nice people. And if you think about it, they have to be, because we're talking about property management, which means managing a property on behalf of an owner who's typically an investor and providing a service to a resident who you want to have a good experience.
Sure.
And so you've got to have, a good user interface from a personal perspective, right? You've got to be a nice person fundamentally to want to do it. And so Mike understood the space and where it was headed. And I bring the other piece of the deal in terms of being a prop tech company. Mike's the prop piece, I'm the tech piece, and to do what we do, which I know we're going to talk about in a second, you've got to have equal parts of both, and then you've got to be able to put it on a platform with sufficient capital to make it work well. And so when you look at the size of the industry, it's a $30 billion industry. It's highly fragmented with 40,000 firms like ours.
Yes, I saw your website.
And it's in desperate need of a makeover. It's probably perhaps the largest $30 billion industry that's been almost completely untouched by true, innovation in the market sense. So that made it pretty easy to come out of retirement, basically, or at least semi-retirement, and say, it's a great opportunity to build one more company, to build at least one more company with a bunch of people that, I like, and I like to work with and who I respect greatly. And so it kind of had all the assets that you like. It's a big industry. It's one that needs to be changed. And we kind of think we have the right team to do it in a way that's fun. So, Isaiah, if you love your work, it never feels like work. And so far, so good here.
If you missed him, he already answered the two questions.
I figured. You keep going. I'll go back watch the recorded show and catch up.
Yeah, welcome
That's
back.
amazing, Joe. You already talked about Pure, but what else could you share with us about your mission, purpose? Who is Pure?
Yeah, well, Pure is, from a business perspective, and I very much see it in two ways. There's the people part, and then there's the business part. The people part being more important, but this is a business show, so I'll cover the business part first, right? So from a business perspective, we're the fastest growing technology-enabled property management company in the industry, right? And so we really do a couple of different things, three things to be specific. One is we're an acquisition company. So our mission is to go out and acquire other property management companies. There are 40,000 of them. So we acquire those businesses, we put them on our platform, we roll them into Pure and apply, if you will, kind of the Pure way of running a property management business at scale. And this is an industry full of a lot of smaller subscale companies, and we're one with scale that's growing very quickly. And so far, so good. We've acquired about 38 companies since we launched about 18 months ago. So roughly acquiring 3 of them a month. So we're an acquisition company. We're also a technology company. Most of the companies that we buy are currently operating on somewhere between 6 and 10 different IT systems to do their job of managing properties. And that's just the external facing systems. If you're talking about the internal facing systems, the math gets even more confusing and more difficult to deal with. So we are inherently a technology company, and what we do is apply our playbooks to existing sets of technology, and we create new sets of technology that help us basically streamline and automate the process of property management at scale. So it's kind of right now a hybrid approach between existing technology sets and our own technology. But the idea, we think, is a worthy idea. The idea not only is to make the business scale and be efficient, but to help the human beings who operate in the business, have more calm lives. Because if you've ever seen anyone manage property, it can produce anxiety. So to take that out of the equation, and then most importantly, and this gets to the third thing of the third point that we're trying to achieve is, we're an experience company. And if you think about the experience of where you live and how you live, it's one of the top 3 problems in every person's household. Where and how do I live? And then it's typically, what's my education? And then what's my healthcare, right? What's my health like? And so we're always dealing with a top 3 problem or a top 3 concern that everyone has. And we want that experience to be as positive as possible. We want it to be great for the resident. We want it to be consistent and clear and take friction out of their life. We want it to be great for the owner of the property, who's typically a small investor. We've managed for a lot of small investors. And then we want it to be, great for the people in our company, because we want them to be in the company as long as they possibly can be. So acquisition company, a technology company, and hopefully if we're doing acquisition plus technology correctly, we're a positive experience company.
I love that. I love that. I love your mission. Can you guys hear me okay? I'm coming in loud and clear.
Clear.
Perfect. So the topic of today's show that you chose today, I don't think I missed that part yet, was Proptech is just Fintech with a P. And more specifically, what steps do Proptech innovators need to take to realize the success of Fintech? So talk a little bit more about Proptech and Fintech.
Yeah, happy to. And it's amazing, when you've been around in business as long as I have now, that I'm in my late 20s. Now that I've been around the block a bit, you start to be able to draw across different industries, parallels, and you can see what's happened in one industry is, possible in another, and in fact, most likely to happen in another. And I spent a lot of my operational career in fintech, right? So it was in financial services. At a point where basically financial services, when I started in financial services, was banks deciding to have websites, and that was kind of the extent of it. And now, so you could log in and at your bank, look at your checking account balance, and that was kind of, hooray, light bulb moment, right? And that didn't really help anyone, because instead of, just waiting for the statement, they could log in and see their balance, but they really couldn't do anything. They couldn't put it together. It turns out the average household has something in the neighborhood of 25 different financial accounts. None of them were connected. There was not any what we called data liquidity possible. So, you had a bunch of data in a bunch of accounts, but it couldn't see each other across accounts, and you couldn't put it in context. And the banks liked it that way, because their view at that point was, if you're a customer of my bank, you're a customer for life. And then, by the way, I'm going to get your kids and your grandkids, because it's just going to be too hard or too much of a pain to switch. But that's not what consumers in the modern era wanted. What they wanted was the ability to consume financial services how and where they desired to consume them, and in any quantity they desired to consume them, and to basically take the friction out of that process. And to do that, you had to enable those accounts to interoperate with one another. And that just wasn't possible for technical, legal, and commercial reasons, quite frankly. And so in my fintech days, our company was a very provocative company called Yodely. Started there when the company was just barely out of the ground, about 30 people back in 1999, 2000. And we said, we are on a mission to satisfy what consumers want, not banks or governments or anyone else, but we want to satisfy what consumers want, which is the ability to take friction out of their financial life. Again, top 3 problem: where's my money and how do I deal with it? And so we built pretty quickly and pretty conclusively a service that allows you to aggregate financial data from different financial institutions. And I tell you, you would have thought, we were the worst citizens on the planet from the bank perspective. They're like, what are you doing taking our data and combining it with other data? And we'd always taken the position, well, look, this is not your data. This is the account owner's data, and you're just keeping track of it somewhere. So they should be able to use it how and when they want. And, long story short, it took from 2000 until really the market started to melt down in the Great Recession in 2006, 2007, when banks fought it the whole way. It was illegal, it was trespassing, it was this, it was that, and meanwhile, on the consumer side, the consumers were saying, "This is great. We love this. It makes my life better. It makes my life easier. It takes friction out of the process of one of my top 3 problems." And so we kept at it, and we had amazing, investors, very convicted and very focused entrepreneurs. And 2006, 2007 rolled around. The banks stopped paying attention because suddenly they were in stress testing and they were kind of in a fight for their own survival, right? So they we were small potatoes to them. We were annoying, but not yet, critically annoying. And so at that point, actually, I can trace it back to 2006. Some of the people in the audience, and you may remember a company called Mint, which was founded by a guy called Aaron Patzer. It was, the first consumer-facing personal financial management solution out there. We combined that with the data aggregation technology at Yodlee, and suddenly you had this concept of data liquidity where you could get data from a bunch of different places. And Aaron and Mint, which was subsequently acquired by Intuit, Aaron and Mint actually put it in context for you so that you could see how your bills related to your bank account, related to your investment accounts, related to how you wanted to plan your life. And suddenly, presto, all that friction is gone. And that's, kind of the moment of what I would call data liquidity, right? So you got the ability to transact and interact with your own data. And then, some people call that the beginning of Fintech. Now, we didn't name it Fintech. It was named by other people. It's since gone on to be the most invested in, most pursued category in technology, right? It still is. And you're talking to a guy who lived in it for 15 years. We took Yodlee public and we sold it out of the public market. So I was in that environment for a long, long, long time. And I thought it would run out of gas, but it hasn't. It's just kept on going. Mm-hmm. And then when you look across at this industry, into property management and Proptech in general, it's got many of the same parallels. You've got what I will call sort of, legacy players with legacy technology approaches and legacy philosophical approaches, quite frankly, to technology working with one another. And then you've got consumers and users, which, in our universe are residents, owners, and property managers who want to take friction out of that system because it's too difficult to operate in now. And so there's a similarity there. There's another similarity where if you think about the subject matter of property management and property ownership, that's just another kind of account. It's like a financial account. And in fact, it's largely a financial account. It's one where, in many cases, the home you own or you want to own or you make an investment in could be your largest asset, including a retirement asset. So it has all sorts of implications on your lifestyle, the quality of your lifestyle. There's taxation implications. And so it's, for me, it looks like just another gigantic financial account, one that has, multiple dimensions to it, just like we did in the consumer finance side back in the day when we, began to work around Fintech. And it's got an opportunity because it's regulated on a 50-state basis, and there are so many embedded financial services to take friction out of the system. And so, the good news is all the financial services exist now in a digital format, and people have accepted that. It took 15 years. The bad news is now we've got to begin to drive them into this sector so that the innovation can occur and friction can come out. And when we do that, and it's starting to happen now, it's going to be a very highly invested in and highly followed category. In fact, I think it's number 2 or 3 already, PropTech versus all the rest, with Fintech still being the number 1. But it's going to be a fast follower. And the good news is the systems are so much better, and people know from building in other industries how to develop it so much more efficiently. It will not take 15 years, which is good.
I was just going to say, hopefully it doesn't take 15 years. So let's talk about these frictions. Of course, some parallels with Fintech and finances and the frictions that we experience there. But speaking specifically with property management, PropTech, what are the frictions that everyone's feeling, and how are you utilizing technology to do away with those?
So let me give you a real example. We spend a lot of time. We have close to 300 people in Pure now, right? So we launched in October 2020 with 3 people, and now we have about 300, and we're growing
100 times
quickly.
Growth in 2 years, less than 2 years. Wow.
And still hiring, by the way. There's a commercial. So we're still hiring, by the way, and across the board. But what we've got across those 300 people is over 1,000 years of collective property management experience. And we actually spend a lot of time from a product perspective, interacting with how people do their jobs, like literally following them around, watching them do their jobs, following them around, filming them doing their jobs so we can go back and watch it later and observe the behaviors and what works well, what doesn't work well. I'll give you a real example. If you're moving in or moving out of a rented property, right? We're third-party property managers, so we manage properties you own and I live in, right? It's different that way. It's not, and so it's a completely outsourced service. To move someone in and move them out today takes about between 4 and 5 separate IT systems and 29 human being driven steps. So a human has to do something 29 times across 4 or 5 different systems that exist, but not in a way that they're connected. So what we do is build process and workflow that mitigates that. So we cut it down to about 2 systems that require human intervention and 4 steps. And in the future, we'll, hopefully get it down to 1 system and 1 step. And so this is the benefit of having a lot of folks who have spent a lot of time in machine learning and with artificial intelligence and automation, just looking at existing systems, because we use all the existing systems that are out there. And we have a ton of them because we're buying about 3 companies a month. So we get new systems all the time. It's just like, how do you sift through that haystack and find the right needles so that people don't have to do 29 things. They only have to do 4. I mean, imagine if you had to do 30 things, 29 things, and now you're down to 4. How great would you feel? You might not feel great, but you feel better for sure. And that's what we see when you observe the behavior before 29 steps. And then after 4 steps, people, the quality of life goes up. And, we want it to go up because we want people in the company as long as they can be there. And if you're a tenant on the other end of that or a resident, you don't have to interact with 29 different steps. It's good for you too. And if you're an owner, the less you hear about it, the better. So that's one example, real world example of taking friction out.
Very cool. I'm curious as to this process of, now you mentioned, so there's human aspects of observation and video of figuring out where those points of friction are. Then you mentioned machine learning and AI. What would you say that your breakdown is right now between people solving problems at Pure and technology solving problems at Pure?
Oh gosh, I think if we were a baseball game, we're in the 2nd inning of technology. So we are literally, it's mostly people driven, because this is despite the fact that technology exists in this category, it's a very analog industry in terms of thinking about it in modern standards, right? It's not well connected. It's not API driven nearly at all. And so therefore most of the interfaces between systems has to be human driven. So still a lot of the effort is human being driven, and you're only now just kind of creeping into how do you streamline and automate that. And so there's, the good news from an entrepreneur's perspective is there's lots of room to innovate. And the good news from an operator's perspective, because we're an acquisition company too, is that there's lots of opportunity to consolidate and get scale, because it's so highly fragmented and so analog. It's just huge opportunity. Now it's not going to be as big as financial services, but it's plenty big. $30 billion and growing just in property management. That is a big industry anywhere.
Wow. And how do you foresee that playing out? What do you think needs to happen, the steps and what that might look like?
Yeah, I think it'll follow, I think, a pretty, I guess at this point, I would call it a common path where you have industries that have incumbent providers of all different types who have, got there one way or another. And, for commercial reasons or philosophical reasons are not necessarily open to letting everybody in and opening up the world. And I understand that. We saw it in financial services for sure, where, banks had big brands, multi-billion-dollar brands, and they didn't want to let anybody into those brands. And they didn't want to put their customers, what they perceive to be, at risk. And so we have the same kind of phenomenon here. It's not quite like healthcare. In healthcare, you got a few large players and they keep all the data to themselves and they keep the systems closed. We're like in between healthcare and financial services right now, where I think we've got incumbents that are not yet fully open-minded, and I understand why. It makes perfect sense. But I can tell you from personal experience in financial services, when you open up, when you make data available, when you make systems available, you'll actually grow your market share. You'll grow the perception of your company as a good company in the category, and you'll grow your opportunities. And so what will happen in this space is you will have some folks who are adopters of that open mentality and want to, be a platform across which people can transact. You'll have others that want to stay closed. And over time, and my guess in this category time is probably 5 years, the ones that prefer to be open will realize more value, and more people from an innovation perspective will be attracted to them. We did the same thing at Yodely. We opened up our API basically to the world, and within 2 years, we had over 10,000 developers and 600 customers, and not small companies like Credit Karma, companies like Personal Capital, companies that are, big fintech players, that were not possible without that open-minded mentality. And just look how much value and how much wealth they've created in the fintech industry, tons of it. Same thing is possible here, but we got to get over the hump. So we'll get over the hump. It'll be sometime between now and the next couple of years. Then we'll get our head on straight about how you truly drive innovation in the category. And then, we'll probably have too many people come in, and because everybody will think it's exciting, which is great. That's what we want. And then it'll get rationalized down to like kind of normal, steady state of business. So probably 5 to 7 years, I think we're in a good spot. The economy is open, the environment is open, and there's an ecosystem in Proptech that is truly self-sustaining and adding value across the board. And as a consumer, when we get to that point, you will look back, and relative to your house where you live in your real estate dealings, you'll probably have 25% of the friction that you had before. And that's a good thing. You'll be happier.
Definitely a good thing. And I think a good thing for everyone. Interesting too. I think we could talk for like ages. I'm really curious how this would play out too with, property being used for permanent residency versus things like Airbnb or like vacationing or temporary residency, and what that might look like too. But unfortunately, we're actually coming to the end of our segment today, our show today. So we would like to bring it back to Pure. I know that you've talked a lot about people. So tell us, I think, America, you've got a question here about the company, their culture.
I'm just curious that you manage a lot of data. I guess that transparency must be one of your core values inside the company that you're planning to grow. What else? What else can you share?
Yeah. How do you keep Pure people happy?
It's actually pretty darn simple, to be honest with you. We run about, for an organization our size, we run about the flattest organization you could think of. And so everyone is accessible to everyone all the time. And that's just the way we are. We like to think of it as we're kind of building the biggest mom and pop shop in the industry. A lot of us don't even have titles. I know you guys gave me a title to come on the show, but I'm one of the guys that founded the company. I don't really have a title. It's just how we operate. And we're very free with information, right? So if you're in the company or around the company, everyone, first of all, we're a very technology company, like in the fact that everyone's an owner. So everyone owns equity, who's a full-time employee in the company. And we give them information as owners. We treat them like investors because that's what they are. We want them to understand, the good and the bad and everything in between about the company. And that's a philosophical choice we make. I know not every company makes that choice. Some companies are very closed with how they share information, but I don't think that gets you anything. If you truly are in it together, and like I said, we've got the nicest people of any industry I've ever been in, then you owe it to them to keep them fully informed of everything that happens. And I think you get better alignment and ultimately better work product when you do that. And we're happy to take the risk to do that because we view it very much as a long-term partnership. This is not, we're building the greatest company we can build. We want to build the most valuable company that's ever been built in this category. And you can't do that by being closed off, in our opinion.
Nice. I hear what I hear you mean is a literal investment as well as the metaphorical one, right? If people are literally invested in the company and therefore they're ready and able and willing and wanting to bring them full selves to the office every day.
Yeah. If we do our jobs right, work will not feel so much like work. It's still work, don't get me wrong, but it'll feel a lot less so.
Very cool. So in the last minute of today's show, I'm going to bring it back to you, Joe, at a personal level. What would you say? You've been in a lot of different founding roles. What have you learned about what really works and what you try to repeat and do every single time? And what is maybe something that doesn't work that you would counsel others to avoid doing?
Oh, gosh. I think the thing that definitely doesn't work, there's an old saying that detail is the enemy of a lie. And a a lot of people in technology get over their skis in terms of what is possible or what they can do, and they do it for the right reasons because they're excited about what they're doing. But I think the thing that doesn't work is getting too far over your skis, because the last thing you want to do is ever disappoint an investor or ever disappoint an employee, because then you're going to disappoint yourself. So I would say that's the thing that doesn't work. The stuff that I've learned, that I think is at least personally valuable to me, is don't ever be afraid to push yourself out of your comfort zone. That's why I go to a different industry every time. There's no shame in the failure. That's how you ultimately succeed, is by understanding what not to do. And then you start linking together all the small things that are the right things to do, and they pay off big time. So that always works. And then I think the most important thing, though, is no matter what you do, show up and be honest with the people who are, along for the adventure with you. Because these are inherently high-risk vehicles, right? Startup companies are high-risk vehicles. They've got a high propensity to fail. And I think that as long as you are fully informing adult people about that while they're working along with you, you get a good outcome. Even if, I've had bad business situations where companies have been in tough times and people still get through it the right way because you're honest and on the level with them. And so that's the number one thing. And if you're not, you're just going to confuse yourself at some point anyway. So there's no upside there.
You're mute. Amazing, by the way. You're mute.
Muted. I'm not.
You were.
Okay.
You're back.
This darn internet connection. Joe, that was amazing. Thank you so much for being transparent with us, your honesty, your vulnerability with us. We wish you and Pure nothing but continued success and no pressure. Today's final show of the week was great. You lived up to the expectation. So join us on Monday at 12 o'clock Pacific for our recap show, where we will be talking about Joe's shows, as well as the other two shows from this week. So don't miss it. And we'll be introducing the shows for next week. So until then, have a great time and stay safe, everyone. Thank you again, Joe.
Thank you. You guys are great. Appreciate it.
Thank you. Bye.